Hello, this is Gary Schnitkey, and this is a 5-minute FarmDoc Daily dealing with corn and soybean economics in 24 and 25. Back to the new old normal. We have seen both corn and soybean prices fall in recent months. USDA is now projecting the 24-25 market year average price to be $11.20 for soybeans and $4.40 for corn. The 2024 marketing year runs from September 2024 through August 2025, so this is the period in which the corn that's produced in 24 will be marketed. That $4.40 price for corn is a dramatic fall, falling from $6.54 in 2022, and similarly soybean prices fell from $14.20 to $11.20. In 2022, we had high prices caused by a number of factors, with the Ukraine-Russia conflict being a major one, as well as supply issues someplace around the world. Lackluster yields in Brazil, Argentina, and the United States. From those highs, we have fallen to $4.40 projected for 24, and we likely have lower prices moving forward even than that $4.40. And if you're looking at the year after, futures markets would suggest $4.25 for the corn price, $11 for the soybean price. Overall, when we were in 2022, many had hopes that we had reached a new higher plateau. And if you look at corn and soybean prices, they tend to vary around a plateau, moving above it and below it, but not trending up or down. Since 2006, we have had an average plateau or average price of $4.55 for corn and $11 for soybeans. Again, we were hoping that the 2022 situation represented a new higher plateau, but now prices suggest that that isn't going to be a new higher plateau. It generally takes something of a long-run change in supply and demand conditions to raise that plateau. In 2006, that was the ethanol build, along with continued strong demand for soybeans in the export market. We now look like we are on the same plateau, and just in the past, once those transitory supply and demand situations work themselves out, we can be in a period of lower prices. How long that period lasts depends. The last one, which began in 2015, lasted 7 years. We've seen 7 to 8 years of lower prices or below those plateaus in the past, and we could again see a price period where low prices persist for several years. How long that persists can't be predicted. The supply and demand conditions that will cause us to be above our plateau are difficult, if not impossible, to predict. So we are again in a period of lower prices. Since we're in a period of lower prices, costs typically don't move back down to lower levels, and in fact, they typically stay at new higher levels, moving down some, with fertilizer costs being the major item that moved down. But overall, we're looking at a period of lower returns, and if we're thinking about operator and land returns, or return to the land and the farmer, those could be below cash rents for a number of years, just like they were in the 2015 through 2019 period. That will cause several things, but the big first thing is that we'll have lower incomes, and farmers will likely use financial reserves that they built from the 21 and 22 period. So those financial reserves will be used, and we will enter into a lower period of returns. That in turn will put downward pressures on returns, and prices could also face downward pressure, but it's likely that they'll hang in there or maybe decline slightly. Overall, we're back to the 2015 through 2019 period, similar to that moving forward, and we seen these before in agriculture, and we again likely are in a lower return period. You can read more about this in my Farm Doc Daily, link to the video description.